I own gold because I believe debt and deficits in the U.S. are out of control and will lead to the deterioration in purchasing power of the U.S. dollar. So what would cause me to sell my gold? But I am suggesting in the next 10 years that gold loses 75% of its purchasing power again. And well, I don't know, and you've been interviewing me long enough to know I don't know. I suspect that the increase in the gold price will mirror the deterioration of the U.S. dollar, its purchasing power. That means that gold should rise threefold or fourfold.
One of the more intriguing financial trends that has gained popularity in recent years is the de-dollarization movement. De-dollarization is an effort by a growing number of countries to reduce the U.S. dollar's role in international trade. The Federal Reserve estimates that between 1999 and 2019, the dollar accounted for 96% of global trade transactions in the Americas, 74% in Asia, and 79% around the rest of the globe. Globally, banks use the dollar for approximately 60% of their non-domestic deposits and loans. In the foreign exchange market today, the U.S. dollar is involved in nearly 90% of all transactions. As U.S. President Trump's aggressive trade policies have eroded confidence in U.S. assets and triggered a reassessment of the U.S. dollar's dominance in global trade, the U.S. dollar has weakened in 2025, with the ICE U.S. dollar index falling more than 9% year-to-date. Although the officially reported total federal government debt of the U.S. currently stands at $36.22 trillion, some experts estimate that unfunded liabilities exceed $70 trillion, bringing the total to over $100 trillion, nearly matching the total net worth of U.S. households, which stands at $141 trillion. Even more alarming is that these two types of liabilities are growing at a rate of approximately $2 trillion per year. At the 2024 BRICS Summit, Russian President Vladimir Putin spoke out about the so-called weaponization of the dollar. He also noted that nearly 95% of trade between Russia and China now takes place in rubles and yuan, bypassing the dollar. As confidence in the dollar fades, gold is emerging as a stronger and more reliable asset. Rick Rule, a seasoned investor and the president and CEO of Rule Investment Media, warned that the recent downturn in the U.S. dollar is far from over. He predicts that within the next decade, the U.S. dollar will lose 75% of its purchasing power, while gold prices could surge to fourfolds per ounce. We're about to explore the video, but first, be sure to subscribe and click the bell icon to stay up to date with our latest uploads. Your feedback in the comments is always appreciated.
Let's look at history. The last time we had a period of rapidly declining U.S. dollar purchasing power was the 1970s. In the 1970s, the U.S. dollar lost 75% of its purchasing power, and gold ran 30-fold. 30-fold. Okay. Now, I'm not suggesting the next 10 years that gold runs 30-fold, but I am suggesting in the next 10 years that gold loses 75% of its purchasing power again. And well, I don't know, and you've been interviewing me long enough to know I don't know. I suspect that the increase in the gold price will mirror the deterioration of the U.S. dollar, its purchasing power. That means that gold should rise threefold or fourfold. Let's say I'm wrong and it doubles. That's not a horrific outcome. Armed with that knowledge, which is to say at least the nominal price of gold rises for 10 years, that meets the definition of a gold bull market. And gold bull markets follow predictable patterns. In the early stages of a bull market, what moves is gold, not the gold stocks. When you first started interviewing me, you expressed your viewers' frustrations. The gold was moving, but the gold stocks weren't. And the explanation I gave to you is, first of all, this is the way history works. But secondly, one asset class, gold, had a buyer, foreign central bank. And foreign central banks don't buy gold stocks. So if one asset class has a buyer, and the other asset class doesn't, of course the one that has a buyer goes up. And that's what happened. Like earlier bull markets, the momentum established by gold eventually spills into the gold stocks. It does that for two reasons. The move in the gold price validates the narrative to investors. They get interested in gold as a topic. But the second thing that happens is as the gold price increases faster than the input cost to produce it, the companies make more money. And we've seen that just in the last 15, 16 weeks. We've seen solid inflows into gold or ETFs, and the buying has been concentrated in the best of the best, the Wheaton Precious, guys like that. When that momentum establishes itself, courage and cash goes down the value chain. And that is what you saw in gold royalty, and that'll continue. I don't think of gold in isolation. I think it juxtaposition to the U.S. dollar and the real U.S. dollar interest rate. The best way to answer that question, Daryl, is gold fully priced, is what set of circumstances would cause me to sell my gold? How would I identify it as overpriced? I own gold because I believe debt and deficits in the U.S. are out of control and will lead to the deterioration in purchasing power of the U.S. dollar. So what would cause me to sell my gold? The first would be a balanced federal budget. We're $2 trillion out of budget and getting worse. The second would be a sane fiscal plan for dealing with $100 trillion in net present value of entitlements, declining real interest rates. And that's tougher to explain. A real interest rate is the plurality of the 10-year Treasury yield to the underlying rate of inflation. And this is the subtle part. Right now, if you believe the CPI, you believe inflation is 2.5%. The U.S. 10-year Treasury rate is 4.5%. So you're getting a 200 basis point real yield. But if you believe, like I, that the underlying rate of inflation is 7.5%, you're getting paid 4.5%, it means that you have a minus 3% real yield. So for me to sell my gold, I would have to have a 200 basis point real yield to underlying inflation, which is to say that the U.S. 10-year Treasury rate today would have to be 9.5%. If that's true, the first mortgage rate would be like 11%. If you look at all of that arithmetic, but particularly the real interest rate, you see that from my point of view, the reasons for me to own gold are very much intact. I'm not expecting gold to increase in price in real terms in the next 10 years. Although it might. It might be because of the human psychology you talked about. It might be because it might be that the increase in the gold price causes people to overvalue the narrative and they buy too much. But all I'm counting on is that the gold price will mirror in nominal terms the deterioration of the purchasing power of the US dollar. It will maintain its purchasing power today in a currency that declines by 75%.
Silver is sitting above $36 resistance, and if this bullish flag plays out, we might see some serious action toward those juicy highs. A recent analysis highlights silver's breakout year, noting its surge to record highs in 2025. Citi projects silver could rise to $40 per ounce in the next 6 to 12 months, potentially reaching $46 per ounce by 2025 Q3 2025, thanks to supply challenges and increasing demand, especially if U.S.-China trade tensions ease or the Fed stays hawkish. Rick sees a massive speculative opportunity in silver for anyone who can handle volatility and has the patience to wait. He has built tens of thousands of portfolios over his career, and one pattern he has noticed is that many investors get the strategy right but the tactics wrong.
Well, first of all, these near-term moves, $1, $2, $3, they're noise. They're not music. That's just the first thing to know. I don't know if you remember this, but I remember one of the first interviews that you did. You were expressing your viewers' frustration that gold couldn't crack through $2,000 an ounce. I don't know if you remember this, but I think gold was $1,800 or something like that. And I said, you know what, Daryl, I don't own gold for a $200 or $300 move. I don't move. I don't own it because I think it might go to 2. I own it because I think it might go to 9. And that's how I feel about silver. To me, the difference between 36 and 34, mixed knocks. I came into the silver market in 1970 when it was $1.20 an ounce. At the end of the decade, it was $50 an ounce. When you see a silver bull market, silver is much more volatile than gold. I don't know why it is, but here's what I know about silver. A precious metals bull market is led by gold, and the price momentum is established by gold. And when the price momentum validates the narrative around precious metals for the generalist investor, not the precious metals investor, but the generalist investor, the Fidelity guy, the Vanguard guy, pardon me, when that guy comes into the market, for whatever reason, perhaps because of the lower unit costs that silver has relative to gold, they crowd into the silver space. And when they crowd into the silver space, traditionally, there hasn't been enough market cap in the silver silo to handle the money that comes in. And it doesn't go up, it explodes. By the way, you're not going to need Rick Rule to tell you when that happens. You're not anticipating a $35, $36, $37 move. The 3 times in my life, the gold price has escalated by 10 times or more. I'm not saying it's going to escalate. I'm not saying it's going to go to 300. If I'm right about the gold price, which is to say that the gold price could go up 3 times from here, the silver price can do more than that. When it's going to happen, I don't know. And you know what? At age 72, I don't care. I'm a healthy 72-year-old. I'm going to see it. I'm going to see it with my faculties intact. I'm going to enjoy it. I'm not going to enjoy the reasons for it, but I'm going to enjoy the thing. So it'll take care of itself. It's a huge speculative opportunity if you can stomach volatility and if you can wait. One of the things I've noticed, Daryl, as you know, I've graded tens of thousands of portfolios. Anybody who wants can go to ruleinvestmentmedia.com, list your resource stock portfolio. I'll grade it. And one of the things I've really, truly learned is that while a lot of people get the strategy right, they say the price of gold has to go up and the price of silver has to go up more. And that could be a 3-year or 4-year or 5-year phenomenon. So they get the strategy right, but they get the tactics wrong. when they're taking on a 3 to 5 year strategy. Or they think that what they want matters. Okay, I got my silver position. Now it needs to go up by Thanksgiving. So people got to wrap their heads around this. I absolutely positively believe that in a nominal sense, the silver price at least triples. When's that going to happen? I don't know. I have no way to know. So I don't seek to know. I just know that, and the volatility doesn't bother me at all. If it goes to 36, I'm not excited. If it falls to 33, I'm not depressed. Like we said at the beginning of the discussion, that's the difference between music and noise. $100 silver, no, that's more like music.
As the US dollar continues to face downward pressure from growing deficits, rising debt levels, and eroding global trust, its purchasing power is steadily declining. In this environment, precious metals like gold and silver are gaining momentum as investors seek protection from currency debasement and inflation. Gold is increasingly being viewed as a long-term store of value, while silver, with its dual role as an industrial and monetary metal, is showing even more explosive potential. If current trends persist, namely a weakening dollar, negative real interest rates, and strong demand for metals, we could see a multi-year bull market in precious metals, with gold potentially tripling and silver rising even more sharply. The stage appears to be set for a significant shift, where capital moves out of fiat assets and into tangible, inflation-resistant forms of wealth. Could countries around the world ditch the dollar in 2025? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.